What is wrong with Dollar General stock? Well, first of all, you never buy a company that doesn't have pricing power. Let's take a look at what's happened to this company over the last 5 years. And as you can see, it took a while to work itself into this stock, but this is an inflation loser. Stock went from 175 pre-COVID, 250 top out, and then straight down to 77. Stock is very cheap. Let's take a look at whether or not it's worth buying down here at 77 bucks. Let's start back in 2022 here, and I want to take a look at the net income line. They're doing $34 billion in revenue, and they're turning that into $2.4 billion in net income. That is a 7% net income margin. Very common for a retail name to have a high single-digit net income margin. But then let's jump out here to 2025 and see what happens. That net income margin goes from 7 to 644 and is expected to be 3%. In fact, the total net income margin at Dollar General is expected to be cut in half from 2.4 billion to 1.3 billion essentially. What happened is they did not raise price fast enough. You can see here on the gross margin line, it goes from 32 to 29. That means they didn't raise price fast enough in an inflationary market. The EBITDA gets crushed here from 16% down to 7% essentially, and the net income margin gets more than cut in half. So it's not just an interest story, and it's not just an employee cost story, and it's not just a raising price not fast enough story. It's an all three of those things story. Dollar General wasn't able to do any of those, and the stock goes from 250 to 77. Let's take a look at the future to see if they can fix it. So does Wall Street think they can fix their net income margin woes? They do not. 3% net income margins are expected to stick around for a long time. And although the company's expected to grow top line at about 5%, it's really slow growth on the net income and the EPS line essentially. What is the problem here? The problem is potential tariffs. A lot of things that come into a Dollar General either come from China or a foreign country, or their packaging comes from there, or some piece of it comes from there essentially, right? So unless the market can believe that these are able to be passed on to the consumer, which they have not so far been able to do that, the market is not willing to give this thing a decent multiple. You really got to see tariffs back down before I think you see Dollar General and the other dollar stores reprice themselves higher, despite the fact that these are trading at a pretty attractive forward PE here. So in conclusion, Dollar General net income margins cut in half. They were an inflation loser. They're probably going to be a tariff loser. The stock's down from 250 to 75. We don't necessarily think it's good down here unless they can change all of these things going on or they all get better. That's the issue with Dollar General and why you probably don't want to own it here. And that's it from us. Unless there's questions, send them on over. We appreciate it. Thanks for everything you guys do on social media for us, and keep it coming.